Hello everybody. Good afternoon. Welcome to Mamaliez. Mamaliez wants to learn today. Today is about a financial health series. On our Saturday program is all about learning about in different areas of our life, in promoting promoting healthy lifestyle, which is in the areas of spiritual health, mental health, and emotional health. And then we also want to talk about financial health. So today on our financial health series, supposed to be Chris Simeon to come in, but at the last minute he couldn't make it yesterday due to emergency reason. So I'm very lucky to invite someone else who is coming in at the last minute, Mr. Stanley Hon, who is a licensed financial planner. He's a certified financial planner of Malaysia, and he is expert in areas of, especially in areas of protection and insurance and will and trust. Now, how I got to know him is through from Popcorn family, where we learn about LinkedIn authority, learning how to be a LinkedIn authority leader. So I met him there. It's basically a business community. So he is expert in this area, and I was looking for someone who could help me in assessing my own financial protection, I'm talking about insurance protection. And I always have my insurance agent, but usually they only promote just the product, their company themselves. But I never found anyone who could tell me which best insurance product is good for me and suitable for me, rather than their purpose is just to sell insurance product, So I would want someone who can give me unbiased information and unbiased rather than promoting a product, but he is helping me to find ways to maximize the protection for my family. And Stanley has shown me that that he could give me a different assess my own protection for my own family, and that's why I really like to invite you to come and join us today. Let me share with you first. This is Stanley. Let me share a screen about Stanley. Let me come. Okay. All right, this is Stanley. Here you go. This is from FA Advisory. So right now, I'll invite him to come up with me. Please, Mr. Stanley, welcome to CR today. Thank you so much for joining us.
Hi, Liz. Good afternoon to you. It's my honor to join your show today. How are you today?
I'm good.
Cool.
So, yes. Today, I think I really want to learn from you what you can share with us. First of all, there's a lot of people didn't understand. I didn't know that certified financial planner have their own specialty in different areas of personal finance as well. I thought CFP
right.
only know this area or this area. But I didn't know each CFP can be specialized in different areas. Maybe you can explain to us what's the difference and how was it?
Before that, let me introduce about myself. My name is Stanley. I was in this industry for the past 13 years. Before I worked as a licensed financial advisor. Basically, I'm a chartered accountant by profession. My last job is in one of the listed company as a CFO. I think for a few years before I decided to quit my job in year 2008. Okay, it was a disaster year. I mean, in year 2008, at that time is on the last financial crisis. So it took me about 6 months to resign myself as an accountant to become a licensed financial advisor. And how come I have such ambition to resign? Because accountant is a rice ball, right? It's a good rice ball. But I also throw out my rice ball and convert myself to become a licensed financial advisor, because I feel that a lot of people, they don't have a proper financial literacy. Okay.
Right.
Let me share with you my stories. Okay. 20 years ago, when my father-in-law diagnosed with terminal stage of a nose and throat cancer. Okay, because we don't have a proper financial literacy, it makes us to spend all of our savings. Okay, it almost put me into a bankruptcy. I have swapped all my credit cards. Okay, me and my wife almost fall into bankruptcy because we need to pay a very high medical bills. Okay, so I remember I don't even have my money to pay a toll. When I want to go home, that is very sad story. Okay,
Really?
so it took us about 5 to 6 years just to repay back my credit cards back to the normal life, because at that time we don't have a proper insurance planning. So it made me, I make a big desire. Okay, I need to educate as much people as possible about the importance of insurance planning. Okay, so that is my way I venture into the licensed financial advisor. Okay, so I give you some inspiration on that.
From being accountant to CFP, yeah?
Yes, you are right. Yeah. So I took my exams and I have been practiced in the industry since year 2009 until now. Okay. So I'm very proud. I have helped a lot of my clients to making their wishes come true, and I have a lot of clients to make their what we call that financial difficulties. They have go through their financial difficulties through a proper financial planning education.
Okay. I see you like you call it like a bodyguard lah.
Bodyguard.
Yeah.
Ada masa punya bodyguard.
Ada masa yang bodyguard, but basically to help to protect us in case something happen.
Yes, you're right. Yeah. So when we talk about financial planning, right, it doesn't mean that it's only talking about you buy a single insurance policy, medical cards, or you just buy some funds or shares, then you already achieve your financial freedoms. So when we talk about financial planning, actually there are few pillars, there are few main pillars that we need to take care for. Okay, first and foremost is we are talking about very important. Okay, wealth maintenance first. What is meaning of wealth maintenance? Basically, is about the cash flow planning as well as on your asset net worth analysis planning. You need to make sure that every year you have a positive cash flow. Your asset need to be more than liabilities, and it need to be grow positively every year. Okay, only then you will have your excess cash flow to do your investments to achieve your financial goals. So when we talk about financial goals, it can be from short term, medium term, or to the long term. It can be either your honeymoon funds, okay. It can be your education funds for your children. It can be retirement funds, or is your another upgrading house funds, okay. Maybe this you want to upgrade to another new bungalow, so you plan ahead. Well, you might need to prepare the fundings on that. So this is how we help our clients hold their hand to achieve their financial goals. But you need to remember, we start our point from point A, let's say in KL, and let's say you want to go to Penang. So in these destinations, basically there will be a lot of ways that you can achieve your destination. You can jalan kaki, you can mengayuh basikal, you can take a motor, you can take a Honda Cup, or you can drive, or you can take an aeroplane. Okay, why I say so? Because each of us, we will have our personal risk appetite. Okay, you can be a chili buddy. So chili buddy, you can take 8 Asia lah. 45 minutes you can reach to Penang. Well, if you are really conservative, no worry. You still can jalan kaki, also can reach there. So it might take you another 3 to 4 days lah. So different people will have their risk appetite. So we need to understand what is your risk appetite in order we can hold your hand to achieve your financial objective. But you also need to remember, from point A to point B, well, sometimes there might be a raining day, correct or not? Okay, like now want to hujan already kan. So touch wood, if there's a raining day, so how are we going to make sure that we still have our guaranteed funding to achieve our financial goals? So indirectly, we will need to look into the insurance planning, because insurance planning is something like your umbrella, okay, to protect your roof. So touch wood, anything that happened to us, so there is a guaranteed funding on top of the table, provide to our family or to our loved one, or even for ourselves, okay, to take care of this type of emergency usage. So insurance will be very important.
You know, when you're talking about this cash flow planning, asset management planning, and insurance planning, basically, I think even a family, I see is like a business, like a company. You know,
Yeah,
at the end
you're
of
right.
the year, they have to do a budgetary, they have to do the planning, and then at the
Yes,
end of the year they will have to do the financial report,
yes,
right?
you're right. Yes,
So I think what we didn't realize, I think a lot of family did not realize, we didn't put it in actual numbers. We didn't even bother to even monitor how much we're spending, what
you're
we're
right.
spending, where is the direction, what's the planning, where we're ending up. At the end of the year, did we do well? What's our cash flow? Did we actually follow according to the budget? Did we
Mm.
actually follow according to the plan? But how
Yeah,
do we know if we don't have the plan at all? So
yeah,
when you talk
you're
about
right.
this, I see, hey, this is actually, it's just same
I think
version,
cash
same
flow,
way.
yeah, cash flow is basically is a fundamental. I mean, before you talk about
Mm,
what type of investment plannings or
yeah.
you want to plan ahead for what type of asset you want to buy and so on. Basically, first
Mm,
of all, you need to look into your cash flow first. Let's say if
mm,
today your cash flow is negative, so basically what
yeah.
you need to do is you need to identify what is your income, what is your expenses. Okay, is there any bad habits on your spending behavior? A lot of people they are not aware they got this type of bad habit spending one, like
Mm,
myself before COVID, well, my office in Mong Kia lah. After the lunch, I like to enjoy my Starbucks lah. I like to enjoy my high class premium coffee. So indirectly, that is a very bad spending behavior, which I personally also don't know until I sit down and do my personal cash flow. Then my auditor also called me, hey, Steady, how come all your bills are from all types of premium coffee house? So I start to realize that eventually I spend more on the coffee. So during this COVID, I mean, when we need to work from home, so indirectly I
yeah.
save a lot of money from there. And
Mm,
this type of savings also help me to to build another asset portfolio.
right.
So yeah, so our role is we help a lot of clients in town to restructure your cash flow, identify your bad spending behavior, cut down your expenses. Whatever excess of the money you can put into the investment portfolio. But last but not least, you also need to remember you need to insure yourself. That's very important.
Okay, Stanley. So I want to go a bit above and beyond just the financial part of it. Okay, but
Cool.
I'm looking about more of the psychological or the behavioral behind of us spending. Don't you think that why we do things the way we do things because of our own fixed belief in or
Yeah.
how we were brought up, how we were raised, what we see,
Yes.
our own experience, and our own risk appetite, why this person become like so takut, so scared of investment, why this person don't think is insurance is important,
Yeah.
why don't you think it's because of our past experiences and
Yes.
due to that.
It's due to our childhood education, I would say, because all the while we go through our kindergarten educations until university, until the tertiary education. I think none of the
Yeah.
syllabus that teach us on the proper cash flow planning, that teach us on how to manage our money properly, I would say. So that is a sad news about Malaysia education, frankly. So
And yeah, not only that, it's also how we see how our
yeah,
parents
it also
spend and
depends on
behave.
our
Yeah,
parents' behavior.
upbringing.
Like
Yeah.
myself, my mom is very skeptical on spending on anything, So she always tell me, Stanley, don't buy this, don't buy that, don't buy this, and don't buy that. So end up
Mm,
when our elderly parents have this type of mentality,
mm,
definitely it will be impacted on us, because the mindset already start to implant in our mindset since day one. Okay,
mm.
so you need to have this mindfulness to aware on this part and to do the changes. So therefore, it's very important for the licensed financial advisor to educate the public. Okay, a proper mindset of money allocations and how to make use of the money properly and how to have a proper uh, money mindset that you can allocate your money for now and for the future. That's very important.
And also allocate the money for fun. We still can do it, right?
Yeah, definitely. Yeah, like
Mm.
nowadays the cryptocurrency is like booming here and there, like rocket, like. So can you allocate your money to crypto? Oh, definitely you can, but make sure you allocate a certain percentage, not all lah. If all, then
Yeah.
meletup susah tu. Yeah.
Okay. All right. So, would you like to share something like you said, the overall in terms of what we are focusing today is on the
Yeah, I think
protection?
today we are going to talk about insurance. Okay. So most likely, definitely, I think this you are going to ask me. So how is my advisory process look like in terms of insurance planning? Okay, first of all, we do not sell any life insurance product. No worry, there's no product selling today. Okay, it's more like education. So my presentation is more like how you need to plan ahead to understand what you have at the moment. Okay, I believe each and every one of you might bought some life insurance before lah, betul tak? Okay, but suddenly you don't know what is the contract all about. You don't know what is the benefit, and whether you are not too sure whether the benefit is up to date or not. Okay, so basically how we do is we will need to understand what you have now, that is your current positioning today, what is the expectations, okay, and from there only then we will see how we able help you to close the gap. Okay, before we help you to close the gap, definitely we need to understand what is your cash flow positionings. Okay, and then how is your health conditions, what is your expectations on the life insurance or medical insurance, whether you want to cover yourself until age of 70, 80, 90s, and so on. Okay, and definitely the most important question is, what is the budget are you looking into it? Okay, so from there, with all the inputs of informations, okay, then we will start to analyze in the industry and see which one is best suitable to you. Okay, because for us, we are champion your interest and not on any of the insurer interest.
Okay, so maybe you can, because you are the first CFP that that I talked to that specialize in insurance, because I didn't know, like I mentioned to you, I thought, oh, it's insurance, just insurance agent. I didn't know that CFP can also be specialized in insurance and table out different kind of proposals or that maybe that's suitable for us. So maybe you can first explain the difference of you and insurance agents.
That will be a heavy topic. Okay, so I think I would like to share my screen now. So let me pull up my screen. Can you see my screen?
Not yet.
Wait, hold on. Sorry.
Yeah, so because a lot of people, even me, right now, only now I know, oh, actually, there's people who can table out different kind of insurance. And I mean, I thought like, we ourselves have to go one by one, different agents, meet different agents. But how do we know which is the best suit for us, So
yeah, you're right.
So each
so
insurance
can you see
agent.
The screen now?
Okay, let me edit the screen. Yep. Okay.
Okay. So how our advisory mechanism on life insurance works is definitely we are representing you as our clients. Okay. So from here we will need to understand what is your goals. Okay. If you are the family key man, you have your loved one and you have a minor children to take care for, definitely you need to have a guarantee funding on top of the table to take care of them. That's what if something bad happen to you. Okay, so it can be income protection, no? Or it can be a family key man. And alternatively, they also might need to look into the medical fundings because nowadays the medical inflation is in double digit. So if touch wood something bad happened to me yesterday, so I need to be admitted and so on. Definitely, I don't want to use my hard savings money to pay on that. Okay, and it can be debt cancellations and so on. So we need to understand what is your concerns, and from there we will do what we call as we will do the calculations on the gaps. Okay, because definitely as of today, at least definitely you have some assets in hand. It can be your property, it can be your share investment, it can be your cash in bank, and so on. So from there, we are able to see what is the gap after minus your existing resources. And with that, normally we will insure the debt. So that is our proper working mechanism. And let's say if the gap is 500,000, example, so definitely you ask me, Stanley, yeah, I know I want to insure 500,000, but there are so many products in the industry. So which one is best suitable to me? So at that point, I will need to understand your expectation. You wish to cover yourself for next 20 years, 30 years, until age of 70, 80, 90, or lifelong. Okay. And from there, definitely I will need to check with you. Touch wood if there's any medical condition before. Okay. So then if there's a medical condition, how we do is we might need to check what is the medical condition, and sometimes we will need to write into some of the insurers for pre-underwriting to see what is the tentative underwriting result. This is how we do. Okay, and from there I will see what is the budget, and you'll see which budget you will be.
Wow, that's a lot of processes. Do you have a sample of how you do the assessment? Like the other day you showed to me, there's an example of
example. Okay.
Of the assessment. Yeah.
Let me pull out my file.
Because I think a lot of people didn't really understand what it means by assessment of our own protection. Why should we need assessment? You know, I already have insurance. Why should I do an assessment? You know.
Yeah, correct also.
So so I tell you, a lot of people, including myself, like, I still need assessment. Like, I think that the funny things about few weeks ago, I was already thinking about it. Okay, how do I know whether I have? I mean, I have my CFP, Certified Financial Planner, Xuan, you know him yourself, and he already advised that something is we needed to top up. So but I don't want to just go to just one agent and then this another agent asking for request, and then suddenly God send you to me. And that's when you're able to help me.
Okay.
God sent you to me, and then, there's somebody who can do the assessment. Well, fantastic. Okay. So
so I just show you one of the dummy report here. Okay. So Mr. Michael learned to log is a dummy name. All right. So this is normally how the process look like. So normally, let's say you have 10 policies or 20 policies. First of all, you need to compile whatever information you have, and we will need to compile into reporting for you lah. So this is the details reporting, some of the highlights in red color and blue color and so on. And if you have bought some income plan before, because a lot of people, they like to buy income plan, but they don't know what is the actual returns. So normally is actually buying income plan is okay one, if you are the person that you don't know how to do savings, you are the very conservative people, yes, definitely you can go and buy income plan, or it can be a good asset for you to do asset diversification as well, no problem. So from here, how we do is we will do the weighted average IRR, internal rate of return. So okay, this policy, let's say if I put into age of 90 years old, right? So the annualized return per annum, weighted average about 3.3%. So with this 3.3%, definitely I will need to ask you this. So what is the budget today? What is your inflation rate today? Or say 4 to 5%. So this policy might not be able to hedge against inflation. But let's say if today you are type of people who don't know how to do savings at all, you are very conservative people, this type of product definitely is better than fixed deposit. But then the mechanism of this product is not liquid enough. It's not able to cash out like your fixed deposit. So there's pro and con.
Okay, so wait a minute. The income plan is only for life, or yes, medical in it?
No, it's only for life. Yeah, it's only for life. Okay, so this type of policy is to create your retirement portfolio or your children's education funding. Okay, for children education, definitely this type of policy is called children education policy, and it's able to generate a certain percentage of IRR as well. Okay.
Can I put a full stop there? One thing the insurance industry are so great about this is that the ability for them to brand the educational planning for the family, for the kids with insurance. Because I think initially, long time ago, insurance that people don't see any value to protect themselves, right? Just to pay kosong with nothing back, right? So then they have to come up with a program that income plan to say, hey, it's not that there is a way, even though you put every month, at the end of this, maybe 20 years later, you still get this money back. So at least you don't, the money is not just burned like that. And then I think before mutual fund industry comes out, then that the insurance already say, oh, why don't you do
actually this is a
education planning
that you can diversify your asset portfolio very well. Because apart from the share investment, property, and so on, you also can allocate part and partial of your money into this type of asset class. But it depends on your risk appetite.
So Stanley, for me, I think it's obsolete branding lah. It's not fair to call it education planning anymore.
I would say
For me, I don't. It's not fair for you to call it education planning anymore because there's so many nowadays. There's so many other options that can be an education plan for our kids. It's not just insurance. It's just that the insurance industry was the first one who came up with this idea of education plan. So I think me as a customer, I say, hey, there are other ways to even do your education planning besides just via insurance. Insurance would be great if, let's say, you don't, like you said, they're not good at saving their money in that way. Yes, this is a good way for them to consistently do it.
I totally agree with you, Liz, on what you said just now. But let me put in more insights on that. Okay, so when we help our client to do education planning, definitely there will be a few types of questions I need to check with you lah. First of all is what is your child age at the moment when you plan ahead to send them to the university. So let's say if the years ahead is maybe 15 years ahead. So I will need to check with you which country you wish to send your children to. It can be US, Canada, Australia, and so on. Okay, and from there we will need to do a forecast. Okay, 15 years later, what is the education cost after taking into consideration of the inflation and so on. So we will come up the future value for you. And in order the future value to achieve on that, I will need to hold your hand, okay, to do what we call as a reverse engineering and see what is the monthly savings or money accumulation you need to do. Only then we will decide what type of asset class that is suitable to you. Okay, it doesn't mean that education plan or endowment policy is not suitable. It depends on case-to-case basis. Because our client, they are really conservative. So conservative people, I think this type of policy is good enough.
Yeah, that's why, Stanley. But the thing is, a lot of people think that education plan through insurance is enough for them. A lot of people, I tell you, I think at least 80%. I have friends who are professional in corporate world still think insurance is enough. Oh, I've already done enough education plan, for their kids. But who knows, that anything can.
So for us, we will prefer, if you plan ahead for your children education, you need to prepare a multiple vehicle. Okay. When you talk about multiple vehicle, it means that you need to have a combination like AirAsia, bus lah. You also have a car and you have a motorbike and so on. So you need to have a combination of vehicle in order we can hold your hand and achieve your financial objective. So I would say endowment policy is just part and partial of the whole journey. Definitely, we will help our client to look into mutual funds, account, what we call that investment portfolio and so on. It can be in a local currency and it also can be in a foreign currency. So there's a lot of ways we can help our client to achieve. And definitely not to be forgotten, property also is a very good asset class to achieve our children education funding. So there are multiple assets.
So just now you were mentioning you did the assessment and then
I will do the gap analysis.
Gap analysis. Can you show that the gap analysis part of that you showed me before?
So I will just show you a sample here. This is a dummy data. So I just can show you here. All right. So let's say my current to log the basic expenses is 10,000 per month if he's not around. This guy is a very basic guy. He still have another 15 years to complete his obligation as a parent. Okay. From here, the children age is 8 years old because 23 minus 15. Why I put 23? Because most of the children education in Malaysia, they will complete their first degree at the age of 23 years old. Okay, extreme in Malaysia but let's say if you are in overseas, then this can be 21. Okay, but don't forgotten you need to put in the inflation rate. So averagely we are putting an official inflation rate of 5% per annum. And let's say these are the children, Batman, Hero, Ultraman, Spider-Man. Okay, so they will have a few years before to achieve age of 18 years old and start their education. So let's say if they just want to do a local 3+1 in Malaysia, that's good enough. Okay, so the current price of a local private U in Malaysia at the moment is about 300,000 if you're studying engineering program, example. Because this scenario, actually this is the actual client scenario happened to my client family. Okay, 4 of them are the son, So he untung lah. Next time he can get 4 daughter-in-law to take care of him. So this is the funding that required, okay, at the age of 18 years old, in order to enroll their children lah. Okay, and this is the mortgage loan outstanding. So this will be the funding he need to require. Okay, if touch wood something bad happened to him yesterday. Okay, because as a parent, you are obliged to take care yourself, not only yourself but your family and the children's education as well. So total he will need 4.2. But from here, we will do our KYC process and we will need to start to understand, okay, what is existing resources available. So he will start to tell me, okay, this is the existing resources available. And normally I will double check with the document. Okay, EPF statement, what is your existing life insurance and so on. Okay, so there will be a gap. Well, the gap is easily 1 million for this scenario. So this is how we help our clients to achieve what is the proper sum insured need to be achieved before we go and select on what type of funds, what type of insurance that he need to be covered up.
So that gap is based on future, what they needed in order to cover for future, or what?
Because we need to take into consideration the future value of money.
Right.
Let's say
so that
your
means
son
that,
now is still minor, but as an obligation of a parent.
So that is the money that we need to prepare for future in case something happened to you, correct?
You are
so
right.
That's the gap that that you are looking into, and will help us in finding how do we close the gap.
You are right. And after we know the gap, then we will go into the matrix process to identify which insurer is best suitable to you. Okay. Because sometimes the gap might not be the children education funding. The gap might be the loan or mortgages incurred. So I will need to understand from you, Liz, okay, what is your outstanding tenure period look like? You might come to me and say, no, my loan is only another 5 years, then I can count him already. So in this scenario, I will look into what we call as a short-term insurance to cover your backside. This is how we plan the people, right?
Cover my backside.
Yeah.
Okay. Okay. All right. So now I wanted to okay, what song is that? Somebody's.
I think my next building is doing some renovation. Yeah.
Oh, is it? Okay.
Yeah.
So anyway, so now do you have a sample of how you do a proposal? If we're asking when to close the gap, how do you propose to a client? Do you have a sample of that? Yeah.
Let me show you. Let me pull out my file again. Okay, example. The gap is either 500,000 gap. So what I can do is I'll put everything into a matrix for you.
Yeah.
Okay. So this is Michael to Locke again, age 47 years old. So his commitment as a father will last, I think, maybe about another 9 years time. So he just need good coverage until age of 70. And the gap is maybe only about 500,000. So how I do is I will put this into 4 insurer and I present to him. Okay, actually the product features is quite similar. Definitely you need to cover with a 500,000 coverage, with a disability benefit and so on. Okay, but the pricing will be some difference. So I will need to start to understand client expectations. Okay, and we'll see which one is best suitable to him. Let's say if this Mr. Michael Learn he have this concern about the budget, right? So definitely we will look into option D already, because option D able to provide such kind of coverage at very competitive pricing. But you also take note the cash value here is lower compared to others, because this policy only can last him until age of 70 years old. Okay, so after 70 years old, he will need to do the top up on the premium. So it's quite flexible. It's quite flexible because at the age of 67, definitely you just need to top up the premium without any further medical underwriting, and the case can be covered until his age of 5 years old. So we are quite flexible on that. But some of the clients, they say, no, Stanley, I want to make sure that you cover until my age of 100 years old. So when we talk about 100 years old, definitely you can see option B here. The premium will be much more expensive. So the objective is same. I mean, it's cover your backside with $500,000 now. Okay, but this policy will be lasted as a legacy of love to the family member when he deceased.
I see. So okay. So once you choose this, and then we choose, and then we just choose based on whatever that you have proposed, lah. Okay, and then that is just the insurance for life. Now,
Let me
how
show you
about
a medical one.
yeah? How about the medical ones? Can people? Is it better that they take life separately, or have life included with the medical, where they have an investment link lah, and then, or is it have separate, just a medical card separate to life? Or there's so many things. So
you are right.
But sometimes, yeah. So people are quite confused. Even me, like I mean, luckily I had a short stay in insurance, so I basically know there's a few different kind of type. But normally people don't know the difference between just life, just the PA, critical illnesses only as a rider, or what, and then then we have the medical card alone, standalone, and then medical card with investment link. So there's so many options, but people think, I have already, enough. But how do we
some of them they close their mind, then that is quite unfortunate. So for us, before we suggest anything to you, definitely we will throw you 1,001 questions, because we need to understand you better, and you need to give us a lot of feedbacks before we can propose something to you. Okay, definitely there are few class of clients. First of all, let's say if you are asset-rich client, it means that your asset is able to generate you a substantial passive income during your lifetime, and this passive income is able to pay for your incremental medical insurance premium throughout your life. Yes, you can go for a standalone medical card, no problem. Because nowadays in the industry, when we talk about a standalone medical card, well, there are multiple providers in town. Okay, and most of them, they can cover until your age of 100 years old, regardless of your health condition. So that's very good. Okay, but some of the clients, they have more fear factor. The fear factor is time X. So in this scenario, we will need to check with the clients. Touch wood, if you fall into disability, if you fall into terminal stage of illness, example cancer or heart disease and so on, do you still wish to continue to pay a premium or not? If you have a choice, you say no, definitely I'm not going to pay for the premium, because at that time I'm not working. I don't have an asset class that can generate me a passive income. So in this scenario, no, I'm not going to pay any single cents in the future if touch wood, the triggering event come earlier. Okay, so in this scenario, normally we will suggest our client go for a normal investment link policy. Okay, so for this client, this sample, this Mrs. Wang, she is a retiree. It's a fake name at the age of 59 years old. So she already retired. So her concern, first of all, is on the costing. Okay, she said, because I already retired and I only receive a fixed pension from government, because she is an ex-government servant now. Okay, so she said, that is only my budget available. So Stanley, can you work out something for me and have a look? So in this scenario, I can work out something for him. First of all, it's based on the standalone medical card. Okay, this is from different provider. The first one is the good news is he can enjoy some cost saving now, but unfortunately, the premium will be increased according to her age. So I need to check with Mr. Wang whether his active asset is able to generate her any passive income or not. So it can cover under incremental insurance cost. So let's say if he's very confident, say no problem, my asset class, tak ada masalah, it can cover on that. So I think option A is good for you. And for the option B is for the very cost conscious people. I don't want my premium to be increased every year. Okay, this is only my budget available. I need you to get it fixed until the end of the lifespan. So this will be another providers. Okay, they are providing a flat premium until the age of 80 years old. But you also need to take note the con part. Okay, the annual limit and the lifetime limit is the same. It means that if you only cover until age of 80 years old, then when you claim habis, then habis lah. The policy will terminate as well. Okay, this is on two types of standalone that we can offer to our clients. And the third is when the client have the concern about if there is a triggering event happen, example illness or disability, please, I don't want to pay for my future premium anymore. Can it be done? Yes, but then you need to take note the future premium will be more expensive in this scenario. Okay, because there are more riders that you need to take in. Okay, so for this scenario is it will be exceeded a budget of 500 ringgit already. Whether he can tolerate on this or not, question mark. We will need to access on the client cash flow statement again. This is how I help my client. Okay. So there is no best product in town that can cover everything, frankly. So we need to see your current situation, what is the expectation, how is your health condition, what is your budget, how is your family health condition. Because if a life assured, their family member have this what we call that genetically impact illness. Example, breast cancer, colon cancer, lung cancer, and they pass away before the age of 60 years old, definitely they might impacted on the underwriting process as well. So there are a lot of factors that we need to take into consideration. So there's no best product, right? So it depends on the needs and expectation.
Okay, so Stanley, maybe you also, can you please share like how many types of insurance is there? First of all, like people are very, like first what I know first, we have the life insurance, just the standalone, there's no income plan with it, meaning you just pay for protection, that's it. There's no income plan, that's one. Okay, second, is the life insurance that has income plan with it, right? That's two secondary. Third, we have the medical card standalone, right? So you just pay for the protection, you don't get the money back. Okay, and then fourth is the medical card with investment link, correct? So that's the fourth type. Okay, and then fifth, the PA is a separate insurance, correct? Is it attached to the main insurance, life or what? Is it attached as a rider or something, or attached to the medical card or what? Or is separate, independent on its own? As well as critical illnesses, is it independent on its own? Can we buy just for critical illness? Can we just buy just for PA, or it has to be right on the life insurance?
End of the day, it depends on the client expectations and what is their needs and what is the gaps. Okay.
But I want to know whether can it be bought separate, independent? Is the PA and the independent insurance, is the critical illness, is it independent on its own, or it has to be bought? Because you see, most insurance agent, they won't tell you those information. They won't tell you, oh, you have an option this you can just buy pure medical card. Oh, you have this option as well with investment link. Oh, you can have independently critical illness because there is not enough there. You can just buy this one. Or you just buy PA because you don't have that. Just buy this. But sometimes they just like propose, oh, must I put life and put this one. And we as a
something like you buy a hybrid car. Everything all in one.
That's because sometimes we buy a lot of insurance we don't need. We end up buying them we don't need because we didn't know. We thought that it has to be bought because that is what been proposed to us. There were no options to us. So that's why I want to ask you, is that necessary for us to, maybe you can tell me how is...
Let me share my screen here. So to let you have a proper understanding, actually, can you see my screen?
Fantastic.
So this is the kindergarten again, A, B, C, D, E, F, A for apple, B for boy, okay? But this is applicable for insurance, life insurance. So we put the thing very simple for you. A stands for accident. So when we talk about accident, there are two ways you can do it. The first way is you can buy your accident through a life insurance policy. Okay, but let's say if your accident is put into an investment link rider or Takafu link rider, you need to take note the cost of insurance per thousand on the sum insured of accident will be increased according to your age. Okay, and when you're getting older, definitely the cost of insurance will be increased a bit lah. Okay, and the other option you have is you can buy a standalone accident policy through the general insurance provider. Okay. For general insurance, the cost of insurance will be flat. There will be no increase throughout the period, and indirectly, they can offer you a lot of additional things like example, medical reimbursement due to accidents. They pay double if the accident happens in the public transport. If kena lompat and so on, they will pay you some value added benefit for you to replace your wallet, your credit cards, and so on. Okay, and there's also like a infertility benefit, like if due to motor vehicle accident and so on. So a lot of things it can be covered. For myself, I cover my PA using a general insurance because the benefit from there is much more comprehensive and is able to cover me from A to Z. Example, bite by snake. Is it covered by accident or not? A lot of people, they don't know one. Actually, bite by snake is covered under your accident policy. So you can claim the medical expenses from there. Kena gigit ular.
Oh, snake. Okay.
Snake, yeah. And you also need to take note, some of the accident PA policy in town, they didn't extend to cover on the motorcycling risks. Okay, let's say you take motorbike one, right? So you need to make sure that as under occupation class 3, you need to make sure that you cover properly under occupation class 3. Okay. Right. Why I say so? Because the hardest claim, I would say the hardest claim is on the PA, because when the person passed away due to accident, right? The body need to do post-mortem. You can't run away.
Okay.
Post-mortem to check whether the blood got any ecstasy or not, whether the body is drunk or whatever. So if they found any ecstasy in the body, filled with alcohol, this and that, definitely your accident claim will be very hard already, friendly. Because,
really?
Yeah, so normally in my corporate financial education talk series, well, normally I will educate all my audience So touch wood, if there's an accident claim, there's things that you need to take note of. And let's say if today you are taking a motorbike to work, please make sure your PA policy extend the coverage to motorcycling risks. This is very important. And let's say if you change your occupation from class 2 to class 3, because nowadays a lot of people, they lost their job, so they start to become a Grab driver, they become a Panda food driver, and so on. So that is occupation class 3. You have the obligation to inform your insurer you do a occupation change. It's a small matter, but take note, the impact is very big.
So you mean if you don't inform and you get into an accident while you're doing that Grab job, that you will not get that coverage
because the obligation is fall back to the life assured to inform the insurance company. I mean, you need to inform your agent or your financial advisor if you are having occupation change. It's very important. Okay, especially from class 2 to class 3. And today, if you are from class 3 to become class 2, you also need to inform because class 3 premium is more expensive than comparing to class 2. So you can save some premium over there as well. So please check with your financial advisor or agent. This is very important, okay, on the accident. So you got two choices. You can buy from general insurance or general Takafu provider, or from life insurance or life Takafu provider. The choice is yours. Okay.
Right.
And second one is talking about the medical card So we got as a basic hospital benefit. Yes, you can buy with a standalone medical card, or you also have the option to buy using investment link as a medical rider or Takafu link as a medical rider. You can have a choice of that. So you will see what is your expectations, what is your budget you have, and I believe your financial advisor and your agent can give you a good insights on that. And I think one thing you need to take note about hospital benefit. I think one point I need to highlight is especially on the cancer treatment, outpatient cancer treatment. So because nowadays Malaysian diagnosed with cancer is become more and more cases happening. Okay, so when we talk about cancer treatment, basically when the person diagnosed with the cancer first of all, he will need to do the surgery to remove the tumor. So the hospitalization cost can be covered. But then you need to take note after the hospitalization cost, he might need to incur some costs on the chemotherapy, on the radiotherapy, immunotherapy, or other treatment, okay, like gamma knife and so on. So sometimes this type of treatment is based on the outpatient. Sometimes, I mean, if the person not admitted, most likely it's based on the outpatient. It means that after he completed the chemo bill or radio, then they ask you to go home and take a rest. This is a norm. So you need to take note under these circumstances. Some of the insurance company, they might not issue a guarantee letter. So what you need to do is you need to pay first and do the reimbursement. Okay, it depends on which insurer in town. Some of the insurer, they are able to provide cashless admission for chemotherapy. For some, unfortunately, they are unable to provide a guarantee letter. So you need to pay first and reimbursement. Because for me, chemotherapy bill, it can be very expensive per week. I mean, easily you can consume about 30,000 to 40,000 sometimes. Okay, so you need to make sure that you have a proper cash flow or you have a good credit card with you so that things can be paid off.
Wow.
But let's say if you don't have a credit card, then to start a bit now. So you need to make sure that your medical card is under cashless basis. I think so far in Malaysia, there are few is providing cashless basis lah. Okay.
Oh, so it's very important for us to ask our insurance
You need
agent
to ask your agent. Yes, you need to ask it.
whether it's a cashless after we come out from the hospital, whether it's cashless or we have to pay ourselves, or it's on claim basis.
Yes. Okay, because it will impact your cash flow.
Right.
So just don't look at medical insurance as one single thing. I mean, it can be impacted on a lot of things when we talk about financial planning. So we need to plan a bit and think about it. And the second point is please ask your financial advisor or your agents what is the thing is not covered in the medical policy. This is very important because normally in the medical policy, there will be at least 16 to 24 types of process mentioning on under what circumstances the medical is not being covered. Okay.
And
so
also on how
ready.
long they will cover, right?
Yeah. So what is the waiting period? For some of the specific illness like diabetes mellitus type 2, okay, for cancer, tumor, cysts, for ENT treatment, for spine disorder, female reproduction systems, hemorrhoids, and so on. The normal waiting period is 120 days. It means that from the policy in force date, for the next 120 days, it will not be covered. For other things like normal illness, kena dengue, and so on, normally the waiting period is 30 days lah. For accident, they'll be immediately covered.
Oh, you're talking about waiting period. No, I was talking about the treatment, for example, the chemotherapy after you're already out of the hospital, you need to go for the therapy. Usually, how long do they cover? Is it like as charged as well, or maybe
it will depend on your it depends on what type of policy you have. Okay, I mean based on the latest market trend now is the annual outpatient cancer treatment should be as per your annual medical limit lah. But let's say if you are carrying an old medical plan with you 10 years or 20 years ago, I don't think so. Normally they will have a separate limit on the outpatient cancer treatment. So you need to get your financial advisor to double check on that part. That will be very important.
Just like I have a very old investment-linked insurance medical card, which is almost 25 years old already. So I need to right now I need to top up already because it's not enough now. Medical not enough because like my case, my coverage was total was 200,000 per year. Now and then last 2 years because my husband I am covered under the company as well, medical card, but only a maximum of 50,000. So suddenly the bill that I had is more already above my yearly of the company one. So I need to find luckily I had my medical card to top up and pay on claim the balance. But then again then I realized, oh my God, even the balance that I pay is based on my old medical card, and that one is going to run out soon. So that won't be enough. That's not enough. Nowadays you need at least 1 million. For me, 1 million in a year. For me,
I think,
1 year.
I think frankly, 1 million is not enough for 1 year. I have my clients diagnosed with breast cancer. I think she used almost 1.5 million a year just for the chemotherapy and on the first year.
Really?
Yeah. So please don't underestimate the medical bills, especially on the medical inflation. The inflation rate is higher than the bills is easily more than that actually. Okay.
My goodness. Okay. So then what so then you have that.
Even a small appendix operation. small surgery kan. Last time my client admitted to SJMC, I think the bill is 26,000. Just appendix operation. So you try to imagine if you don't have a cut and you need to take out your own saving money or your EPF money to pay on the bills. Mampus.
Mampus you.
Yeah. So I would say medical is very important. No?
I know, share back that slide because you haven't talked about other insurance.
Okay. Belum habis lagi. So that's the medical law. And then the medical one, I also have very important clause that is called incontestability clause. So it will appear in your front page of your insurance contract. Please check on that because if there is a major claim arise within 24 months of your policy in force, subject to investigation by insurance before payout. So you can check on your policy contract. The third is on the critical illness. Your layman term is called 36-hour illness. Okay, I think now the policy more advanced. It can cover from 36 to 39, then from 43 to 48. I think now is 70 already. Some of the insurance company even they offer more than that. Okay, so this is on the critical illness. Why we need to get coverage on the critical illness? Try to imagine back to the cancer patient. So after the client do the chemotherapy, okay, basically he need to rest at home, betul tak? Maybe another 2 to 3 years easily. Okay, so at that time he might not able back to the office, and I don't think your boss is so generous, still give you a income lah. So in this scenario, most likely you are taking an unpaid leave. So at that time, you still have your obligation to pay for your children education expenses. You still need to pay for your housing loan, your credit cards, your parents' medicals, maintenance, and so on. So this, where is your money come from? Are you going to take out your own money from your bank account to pay for this? I don't think so. So basically, you need to have a good income replacement policy that is on the critical illness to pay you a one lump sum to take care of you, touch what anything that happened to us.
Correct.
Yeah, this is on C, and
D
is talking about disability lah. So disability it can caused by 2 reasons. One is due to the illness. Example, diabetes. Okay, diabetes it can cause our limb to be amputated. So as long as consecutively 6 months we are unable to perform our job in the office, so we can submit the claims to the life insurance company, and they might able to approve on that based on the disability. The second type of disability is due to total permanent disability. It means that accident happen, impair 1 leg, 1 hand, 2 eyes, 1 ear, one ear, 1 eye, and so on. So you can claim on the TPD benefit. Okay.
So these 2 critical illness and disability also can buy independent on a loan, standalone as well, or it needs to have an attached of life.
For critical illness policy in Malaysia, normally is attached to the life policy. It can be conventional type of policy. It can be Takafu policy and investment policy. Of course, some of the provider in town, they also offer standalone critical illness lah. Okay, only from limited insurer. Okay. For disability, no. Disability normally they come together with a life policy. So if you get a life of 500,000, normally they will give you a complement disability of 500,000. Of course, some of the company is they're split up between that benefit and disability. There are some insurance company in Malaysia that split up the disability benefit and that benefit. Then it means that you can claim 2 kali, 1 time in disability, 1 time on the death.
Okay, this early stage critical illness is not the same as critical illness. What is that?
Oh, tak sama. For early stage critical illness, example, I use, let's see, I use breast cancer as an example. Early stage critical illness means that when a female detected there's a lump in the breast, and the lump is a malignant, and fortunately, the cancer cell haven't spread and impacted on other organ. So we call this as a CIS or carcinoma in situ. So in this scenario, then we can make a claim on the early stage critical illness.
Before it become cancerous, is it?
It already become cancerous.
It's already been cancerous, but you managed to...
Dia belum spread lagi. So it's still on the local place. So we call this as a carcinoma in situ, CIS. So in this scenario, yes, you can claim on that.
So this one also can be standalone or still have to be on live or what? How does
It
it work?
depends. Some of the provider they offer standalone early CI, but most of them they offer in the investment link policy. And I personally feel the investment link policy, they are providing very comprehensive coverage, especially on the early stage. But you need to take note, the cost of insurance for early stage is much more expensive compared to the critical illness. Early one memang mahal because the chances of getting claims is very high lah.
Yeah. So now family income protection, that one normal lah. If something happen, then you need this one. This one also cannot be. It has to be on the life lah, basically kan.
Normally it's on the life. So the life you have the choice.
This is life yeah.
You can buy under a term policy, you can buy whole life, or you can buy an investment link policy. There are a variety of choices in town.
Okay, what is the difference between whole life and term life?
Term life, maximum term life in Malaysia, it will only cover until the age of 80 years old.
Yeah.
So if you live longevity enough at the age of 81, then touch wood the person die, then tak boleh kena lottery lah, dia tak bayar. Okay. If you buy in the investment link policy, the thing will be much more flexible. So you have the right to sustain the policy until age 70, 80, 90, and 100. So let's say you reach to the age of 80, you still want to continue the policy, you just top the premium. For the whole life policy is definitely you cover until age of 100 years old.
Whole life is until 100 years old. What happened you more than 100? Nothing already.
Nothing already. They will return you the surrender value lah.
The surrender value.
Yeah, that is the drawback of Malaysia policy. So let's say if you have this kind of mentality, if I live longer, let's say to 110 years old, so how any insurance to cover me or not? Yes, in this scenario, you can consider to cover yourself in the offshore insurance from Labuan, from Singapore, and so on.
Okay, I have a very important question to ask. Nowadays, there is a trend. There's for Islamic insurance. I don't know what it's called. That now everybody have to buy to protect the family, make sure that we get the money, especially the wife or something like that. I don't know what's the name of what do you call it? There's one Islamic now.
Very.
Huh? No. That's. I don't know what kind of insurance is that. I forgot what it's called. I mean, but everybody is they call it very famous. Like everybody is buying it under Islam. They're selling. They're trying to sell it for Islam.
I think it's still a life insurance now. But sometimes they can cover husband and wife together. I think there's
because they were saying it's based on Sharia law and that straight. That it can no matter what. That I was thinking it sounded like same only. It's just that it's
the same lah. That's a selling concept.
Yeah. No, I mean it's the same way. Is there anything new nowadays, or it's just that they rebrand it into Islamic Sharia compliant?
There's 1001 sales concept offered by the insurer. So it depends on your needs, depends on your objective. So our role is to get the correct one for you. That's all.
No, because nowadays there are some friends it's not the same like other insurance because this is Islamic for sure to help us to cover if anything happens to us. And I said that is what insurance is all about. Even the normal insurance, if anything happens
to
us,
that is under Takafu policy lah. Yeah, I think we are also representing 4 Takafu provider in town. So I think most of the business we can.
What is the difference between Takafu and normal insurance?
Because for normal investment link policy is they will invested into non-Sharia compliance funds now. Example on the tobacco sector, gambling sector, and so on. But for Sharia compliance policy, especially in the Takafu link policy, so they will have Sharia compliance committee to make sure that the funds is invested only in Sharia counter. Okay, and of course there are also some difference on the wakalah fees and so on.
Wakaf
is a gift during the lifetime.
Wakaf, I think so. Wait. Let me check. No, I think it's wakaf. I don't know. There's one particularly now in trend. Everyone is like going for it, so I don't know.
Yeah.
So
Like
basically it's just
I also have some Muslim clients. They love their wife very much, so they use a Takafu policy to set up the Takafu Amana during the lifetime, to provide something to their wife. This thing we also encounter quite regularly.
Okay. So lastly, I just want to ask about the loan insurance. What's the difference between the one that you mentioned to me the other day?
Loan,
MR,
ML and MR, yeah.
yeah.
So
How
basically, there's a
important? Yeah.
difference. There's a difference between MLTA and MRTA. I think
Mm,
most of the banker now, they will bundle their loan package together with the MRTA insurance to you.
mm,
Okay. So with the MRTA, definitely you will enjoy a cheaper rate of the loan interest lah.
right.
Okay. But then you also need to take note, MRTA is a single premium insurance product. So the premium can be 5 figures and above. So normally you won't pay for the premium, and the banker also now they ask you lah, at least why not you just include the premium into your loan package, then you can pay equally over your loan tenure lah. Then you also very happy. Then tak apa lah, kita beli aja lah. But indirectly you also need to take into considerations the impacted interest compound rate is based on the daily less basis over your loan tenure period. So end up your single premium might be very, very expensive. Okay. So that is option number one. Option number two is you can buy a MLTA, we call it as a mortgage lifetime assurance. Okay. The difference is MLTA, they are providing a flat coverage. Let's say you buy for $500,000, it'll be $500,000 for your entire term. If you buy MRTA, it's based on the reducing balance method. I mean, the sum assured will be reduced over the loan tenure period. So it depends on when the person pass away. The insurance normally they will pay out the outstanding loan, but it also depends on the bank actual outstanding. Sometimes when the interest naikan, I mean the actual outstanding will be higher, so there might be a gap lah. There's a possibility the gap might be happen. Okay. For MLTA, definitely they'll pay you the flat amount, $500,000 anytime. So let's say your loan is only 300,000 at that time, so the balance of 200,000 can be taken by the family members.
So which way is better in what situation for it?
It depends on you. Let's say this, you only have one house. You're not going to buy any house. Ini saja rumah yang saya ada lah, I will tinggal here forever. Then you can consider to take an MRTA, no problem. But let's say today, if you are the property investor in town, then you cannot buy MRTA law because every house you want to buy one, then susah a bit lah. Because MRTA is attached to your property. MLTA is attached to your body. It's based on the human. Okay. So let's say if today you are the property investor, you like to flip your property, make some profit, then you buy a new one. I will personally suggest you buy an MLTA. Okay, because MLTA, it can cover all your properties as long as you are still survive. So touch wood, if anything happened to you, a lump sum will pay out, and this lump sum will be used to offset whatever loans you have, and the balance that will return to your family member. Okay, for MRTA, whenever you do the financing, then you need to buy a new one. So quite troublesome because from time to time, it doesn't mean that we can buy life insurance forever. Touch wood, if our health condition is not so good, then there's a possibility that you can't buy a life insurance anymore. So in this scenario, my personal suggestion is you just buy a big policy to cover all your outstanding loan. And from time to time, when the property is flipped, so it still can be covered.
But by what the life policy?
It can be Takafu link policy, it can be conventional policy, it can be term policy.
That can cover
the loan tenure period. Yeah. Let's say you expected the last loan you serve is at the age of 70 years old, example. So you have the option, either you go for the investment link policy, Takafu link policy, or you can buy a term policy until age of 70 years old. So, but my personal suggestion is you should go for the investment link policy because after age 70 years old, sometimes you still want to cover another thing. The thing can be flexible and still cover on you.
Okay, so you mentioned to me before about if we want to claim for if something happened in terms of the MLTA and the MRTA, what we need to do.
Make sure for the bank, right? For the bank, I think one thing you need to be very careful when you buy MRTA. Make sure you obtain the certificate of MRTA because a lot of my clients, actually most of my clients, they forgot to get the MRTA certificate. So when the person passed away, so it's quite troublesome for us to retrieve the MRTA certificate from the insurance company. And the bank, the bank will be very realistic at that time. They will ask for the certificate of MRTA before they offset the loan. Else, the interest will be still continue to be calculated. That is the things happen to my client.
Wow. But shouldn't the since bank was selling the MRTA, shouldn't they have that certificate anyway?
From my past experience, it doesn't work in this way, because the bank is the bank, the insurance company is the insurance company. They are separate entity. So you have the obligation to get the insurance certificate from the respective insurance company.
But this information, the bank never tell us when we take loan from them and buy the insurance from them, right?
I cannot comment. So you pandai, do a proper filing on that. Make sure the e-certificate you file properly, put into your Google Drive lah, put into your G Drive, keep it properly. So touch wood, when the unfortunate thing happen, make sure the family member know where is the certificate all about, and immediately we can do the filing to the claims to the bank, and notify to the bank. So with that, the bank will not charge you any more interest. Else, the bank will say, okay, I acknowledge the notification, but I still will charge you interest because I haven't seen the MRTA certificate. So that is the challenge lah.
Stanley, I talked you so long, I forgot to even ask the audience any question. Anybody want to ask question? Please ask Stanley now before we log off. If you have any questions, please do write on the comment, and then and then Stanley can answer you whatever question that you have. Talk to you for more than 1 hour. I forgot to ask the audience.
Oh yeah.
Yeah,
but only 2 hours talking.
Yeah, so but we don't have any question. We're going to end the show. If any of you want to have a free assessment of whether you have a sufficient insurance protection for your family from Stanley, do private message me or do make a comment, and I will reach out to you, and so that I can pass information to Stanley so that they can do the free assessment for you. Yeah.
Yeah.
Yes.
Or you can also reach to my LinkedIn. Okay.
Oh yeah.
You can search for LinkedIn under Stanley Hon. So you can DM me there.
Yes.
And I can answer any of your concerns. No problem.
Yeah, please connect with Stanley Hon on his LinkedIn as well. Stanley, do you have any last tips that would you like to share? What are the maybe 5 things or 3 things that for us as a customer, client, for our family, what are the important things that we need to look at when we look for insurance for our family protection?
I think first of all, you need to understand what you have at this point. Okay, what is the leakages? What is the shortages? And if possible, please contact with your agents or financial advisor. Let them to review what you have at the moment. Identify what is the gap. Okay, try to understand what is the thing not being covered. Okay, if you have the problem on that, please DM me. If my work is overloaded, no worry, I'll get my consultants to help you to have a look on the policy contract and see what is the loophole. Okay. And from there we can do some recommendation for you. It doesn't mean that you need to buy anything from us, because for us is our job is to make sure that you have to educate, you have a proper things. Okay. And from there you can engage us to do your financial planning report as well, your cash flow planning report as well. I think we are more happy to help you to do that. And at least you know what is the things that you overspend. That's very important, because a lot of us, we live in the blind spot. We don't know where we spend our money. So through us, you're able to visualize what you have, what is your cash flow positioning, what is your bad habits and so on. Then from there, you can save. Eventually, we also can help you to save on some of the unnecessary spending on the insurance premium, because actually most of the Malaysian, sometimes they overspend on the insurance premium. So this is how we help our client to save their money and grow their asset portfolio.
Thank you so much, Stanley. I think what you're sharing today is very, very valuable, even for me. Like I said, this Mamaliez wants to learn, and I think I do all these sharings, and our live show is so that I get everybody else to come and join me to learn from the experts. Yeah, and I believe that family as a unit is like having our own business. And our own corporation, we do need to have our financial reports for our own family at the end of the year, and we do need to do planning for our cash flow, our asset management, as well as on protection. Those areas. So I do really believe in that, and I'm so lucky to meet people like Stanley. He will soon do assessment for my own protection. I never had that before. I have my other CFP handling on doing my planning as well, and hopefully I think we are on track so far. The
Good.
COVID.
Congratulations to you.
Thank you. But I think by the COVID, actually a big corner skate, but then we got back on track, which is amazing. So I think having a CFP, having someone to guide you, I'm just employing what Robert Kiyosaki teaches, OPE. You know what's OPE?
You teach us lah. What is OPE?
Other people's expertise and other people's experiences.
Cool. You are the expert.
No, I mean, for me, if I'm not the experts, then I get the experts to do it for me. I engage the experts. If I want to get my body nice, I get a trainer, fitness. I want to have physical health, I get a nutritionist. If I want to do in terms of become an authority leader in LinkedIn, I get popcorn, right?
You're right.
Yeah, so so you engage all the
money matter, you need to look for a financial coach. That's very important.
Yes, correct.
Please look for a highly qualified, competent, and a licensed people. Okay, because we have been highly trained on this area, and we are able to hold your hand together for the long term.
Right.
Yeah.
All right. Thank you so much, Stanley. For everyone, thank you so much for joining us. You can play a replay. You can share this with your friends and family members. Thank you. Have a good day and have a good evening.
Happy Saturday.
Welcome to family. Yeah, happy Saturday. Bye.
Okay, bye.